A surprising number of people today have nothing set aside for emergencies, which leaves them exposed to unexpected expenses and challenges. Whether it's a medical bill, a broken down car, or losing a job, not having a financial cushion can make these situations even harder to handle. Let's take a look at some of the numbers. You'll be surprised at what you see. A recent Bankrate poll shows that almost 6 out of 10 Americans, about 59%, aren't feeling too great about their emergency savings. For many, it seems that the amount they've managed to set aside just doesn't feel like enough, leaving them uneasy about handling any surprise expenses that might come their way. This feeling of financial discomfort is pretty common and speaks to a larger issue. A lot of people wish they had a bigger cushion for life's unexpected moments, but for various reasons, they're just not there yet. Is this because their income is too low to allow for saving, or are they simply not prioritizing it? Most Americans, about 89%, say they need at least 3 months' worth of expenses saved up to feel financially comfortable. Experts also recommend having at least 3 months' worth of expenses saved at a minimum. In reality, just 44% of those surveyed actually have that kind of cushion in their savings. The difference between what people feel they need and what they actually have saved shows how challenging it can be to achieve financial security. They know they need more money set aside for various reasons. They just can't get there. For many, saving enough to cover just a few months of expenses is tough, even though they know it would provide valuable peace of mind. A significant 63% of Americans say that they would need at least 6 months' worth of expenses saved up to feel financially comfortable and secure. This shows the importance people place on having a comfortable emergency fund to handle unexpected costs without stress. These people know just how fast you can eat through 3 months or more of bills, whether it's due to a large unexpected expense or due to a lapse in income. Meanwhile, 26% feel they would be more comfortable with a smaller cushion, needing between 3 and 5 months worth of expenses saved, which could be a reasonable amount in some cases. Like if you have money set aside in retirement, you could pull from that in a worst-case scenario. While 6 months might seem like a large goal, the fact that a combined 89% of people feel they need at least 3 months of expenses shows just how essential it is for most to have a safety net in place to protect against life's uncertainties. As of May 2024, about 27% of Americans don't have any emergency savings, the highest rate since 2020. This means more people than ever are going without a financial cushion, leaving them in a tough spot if unexpected expenses pop up. It's a sign that for a lot of people, just putting a little money aside for emergencies has become harder to manage. What happens if they're hit with a surprise expense but have no savings to cover it? Do they put it on a credit card, piling up debt with interest rates as high as 29%? Do they borrow from friends or family, risking strain on those relationships? If they can't make rent or mortgage payments, could they face eviction or foreclosure? And if their car breaks down and they can't afford to fix it, will they lose their way to get to work? As you can see, a lack of savings doesn't just threaten their finances, it can impact every part of their life, and things can take a turn for the worse in a hurry. In the event of emergency, many Americans said that they would resort to borrowing. As of December 2023, only 44% of U.S. adults say that they would cover an unexpected expense of $1,000 or more with their savings. While borrowing might seem like a quick fix, it only offers a temporary solution, pushing the problem down the road. When the credit card bill arrives at the end of the month, the situation becomes even trickier. Making just the minimum payment means that most of the money goes straight towards interest, making it almost impossible to pay off the balance. And with little hope of having enough money to cover the bill, many people end up stuck in a cycle of debt that only gets worse. According to recent data, 63% of U.S. adults say that inflation is causing them to save less for unexpected expenses. With the recent spikes of everyday purchases, many are finding it harder to set aside money for emergencies and just get by from day to day. Inflation has driven up the cost of everything, from groceries to insurance and utilities, making it harder for people to set aside money for savings. Because of this, more and more people are being forced to focus on paying for their immediate needs instead of building a cushion for their future. This shows how tough things have gotten for many, as even small price hikes can have a big impact on their ability to save. 45% of people say that rising interest rates have affected their savings. With higher mortgage rates, car loan rates, and other types of debt, this change can have a major impact, something many don't fully notice at first. Generationally, there's a wide range in the levels of emergency savings across Americans. Millennials, or those aged 28 to 43 in particular, have the highest percentage without any emergency savings, with 34% of them lacking a cushion. This is followed by Gen Zers, ages 18 to 27 at 29%, and Gen Xers, ages 44 to 59 at 31%. Baby boomers, ages 60 to 78, have the lowest percentage, with just 16% reporting that they have no emergency savings. As you can see, it's not just the younger age groups facing this problem. Almost 1/3 of US adults have managed to build up more emergency savings this year compared to last, which shows that some people are finding ways to save more, whether through better budgeting, spending less, or being more focused on setting money aside. However, about 1/3 of people actually have less saved up than they did a year ago. This drop could be because of higher living costs, job uncertainty, or just the various financial pressures that make saving harder. While some people are making improvements, others are headed in the other direction. At first glance, you might assume that the reason people have low savings is because they aren't earning enough money. While not earning enough money is certainly a challenge for many, it's not always the biggest factor. In fact, a study by Forbes found that a surprisingly low 44% of people say that a lack of income is one of the main reasons they're stuck living paycheck to paycheck. This suggests that there are other issues at play, like poor spending habits, high debt, or unexpected expenses that can prevent people from building up their savings, even if they earn a decent income. It's a reminder that earning more money isn't always the solution. Sometimes it's about managing what you already have more effectively. To build an emergency savings cushion or add to the one you already have, it's helpful to set up a direct deposit from your paycheck or an automatic transfer from your checking account into a dedicated savings account. Automating your savings is essential to making it happen. This method takes the decision out of your hands, making it easier to save consistently without having to think about it every week or every month. With household budgets tighter than ever, automating savings ensures that you're putting money aside regularly, even when managing expenses feels extremely challenging. By setting it up this way, you're less likely to skip a month or spend the money on non-essential items. Building and maintaining a sufficient emergency fund goes beyond just having money set aside for unexpected situations. It's a sign of financial maturity. When you have an emergency fund, it shows that you have the discipline to resist the urge to spend your savings impulsively. Instead of using that money for immediate wants, you prioritize long-term security, understanding that it's essential to leave it untouched for emergencies. In other cases, it shows that you took the necessary steps to increase your income to make it possible. The ability to delay gratification and be resourceful is essential to mastering personal finance. It's like reaching a new level in your financial journey, where you can differentiate between what's necessary and what's simply a desire. This kind of financial awareness and self-control is a fundamental requirement for building wealth. Without this commitment to saving and managing your money wisely, reaching significant milestones, like becoming a millionaire, becomes nearly impossible. True wealth building is rooted in habits like these, where small, consistent actions today lead to greater financial freedom and security in the future. As you can see, there are serious issues with personal finances of many people. Unfortunately, those who either can't or won't take the necessary steps to build a solid savings account are unlikely to achieve prosperity.